All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk to you guys about the Bitcoin miners, and I have a couple of brand new analysis that I have never shown before on this channel, and I really haven't seen anybody look at things this way, so you guys let me know what you think of this. I have a lot more things like this that I have not yet shown, and I'd like to start doing these deeper dives. So if you're new to the channel, we talk about Bitcoin and the Bitcoin miners all the time, so please subscribe to the channel and hit the notification bell, and if everybody would smash the like button, I would appreciate it. It helps the video out a lot, gets this video out to more people. Okay, so like I said, I've got some new analysis. We're going to talk about the Bitcoin miners. I want to talk about their book value and their book to price value. So I hope everybody sticks around to the end on this one. I got everybody's quarter ended June 30th, 2022. I got all their financial statements, and what I've done is put the book value. So the book value of a company is its equity. So as you look at a balance sheet, that's essentially what I'm doing here, is I'm showing you how much equity the company has built up over time. So in theory, the more equity a company has, the more it should be worth. However, it doesn't always play out that way, and you're gonna see there's a ratio called the current ratio, and that measures your current assets versus your current liabilities. And the reason that that is important is if you have more current liabilities than you do current assets, then you can't necessarily pay your bills. So you're going to have to raise money in some other way or do something. So you can see two of these are green. So the two that are green, and one actually surprised me a little bit, Hut8 and Bit Digital, stock ticker BTBT, those two companies have a current ratio greater than 10 to 1. Conversely, if you look at the red companies, the companies that are in red have significantly more current liabilities than they have current assets. So they have a short-term liquidity problem. So there's a few that I've got in blue. So those companies have particularly strong current ratios. Those companies have somewhere on the magnitude of 3 to 1. So that is a very strong position. That is very healthy. It's just that there happens to be two that are actually 10 times or more. So, I wanted to differentiate. The rest of these that you see in black, they're somewhere around 1. They're not super strong necessarily, but they don't have a problem either. And, if you want to dig into any one of these, you guys can check this out for yourselves. All of this is available on each company's website if you look at their quarterly financial statement. Okay, this is the first analysis. So this is showing you graphically what we already looked at. This is the book value by company. So what jumps out at me are a few things. Number one, Riot Blockchain has by far the largest book value. They have the most equity out of any company across the board. So in Riot's case, they have by far the largest book value, but they do not have the largest market cap at all. So that could be an indicator that they are undervalued versus their peers. So again, we can't just look at this one thing all by itself. We've got to take a lot of other things into consideration. But if you remember, Riot was also one of the blue companies, meaning it had a very strong current ratio, current assets versus current liabilities. It has more equity by far than any other company. And I want to differentiate. A lot of people will say, well, they issued a lot of stock, so they diluted their stock. When we look at the next chart, it is market cap. So that has nothing to do with the stock price. So a stock price can go down, but the market cap should not go down. When you raise more money, you have more money. So your market cap would increase accordingly. You have more equity. So it's that book value to market cap that I'm looking at, and that's all I'm trying to do here. This is not financial advice. I'm not saying if they're great on this chart, go buy them. That's just one piece of information. So you'll see we go down from there. Marathon is the next closest at $659 million. And then you've got Core Scientific. So another one that jumped out at me was in fourth place, you've got Hut at 407. And in fifth place, you've got CleanSpark at 377 million. Those two are very close to Core Scientific, yet when we look at their market cap, you're going to see they're drastically less than Core Scientific's market cap. Another one that I think is going to end up standing out is Bitfarms as well. So that's the first thing I wanted to show. There's a few extra large companies. We've got a bunch in the middle, $200 million to $400 million range, and then we've got some smaller ones down here. Now, some of these smaller companies actually have very big aspirations. It's just that at this point, their plans are not necessarily playing out the way that they intended, or they're behind schedule. Now I want to look at price book ratio. So that is comparing the equity in a company to the market cap of the company. So for most of the entire marketplace, companies trade at a multiple. In other words, if they have a book value of 1, they'll have a market cap of 2 or 3 or 4 or 5. Or, in the case of some of the tremendous tech stocks, sometimes they'll trade at 20 times or 30 times their book value. Well, this entire industry, being the Bitcoin miners, this is one of the lowest industries you'll find in the entire stock market right now. That is a part of the reason I think a lot of these are oversold. The good companies will rise, but if there's companies that aren't going to make it and they're going to go out of business, it doesn't matter how good this ratio is. If their stock's going to go to 0, then it's going to go to 0. But this can give us some clues of stocks to maybe dig a little deeper. This can point us in a direction. Hey, maybe I want to do some more due diligence on these 2 or 3 stocks because they really stand out on this chart. Or, hey, maybe I'm worried about these 2 or 3 charts because I didn't realize, the ratio was so bad on these, and sometimes there's mitigating factors. So okay, enough build up, let's get to the analysis. Okay, so here's our price to book value by company. So the lower the number is here, in some instances that may be pointing out an opportunity where a stock is underpriced. In other instances, it may be pointing out a stock that has a fundamental problem with it and there's a reason that it's so underpriced. These vary dramatically. Stronghold is down here at less than 0.25. They're at 0.23 book value to market cap, which means their book value is almost 4 times the size of their market cap. So that would seem to be out of order. However, this is one of the companies that I had in red and they are struggling. But I do want to add that they did restructure all of their debt. So this is a much healthier company today than it was 30, 60, 90 days ago. And I don't think the price has reflected that. So the market is still extremely concerned about this despite the drastic steps they've taken to improve their situation. I'm going to show you a few of these that are some of my larger positions and we'll see how they rank on this chart because one of my strong conviction holds is CleanSpark. And again, this is not financial advice. I'm not telling you guys to buy. CleanSpark's book value is double its market cap. So to me, there's a lot of room to the upside on that one. Riot is another one I have conviction in. Riot is less than 1 book to market cap. So Riot and Marathon oftentimes trade in tandem, and you'll see Marathon is all the way at the top of this list. They're trading at twice their book value, yet Riot is trading at less than 1 times its book value. So to me, that's a big discrepancy. So in other words, Mawson was another one that we had marked in red because they have a liquidity problem. So they're down near the bottom of this list, but maybe that's because of their liquidity problem. Riot is a company that we had marked in blue, which means it had a very strong balance sheet, yet it's still at the low end of this spectrum, less than a 1-to-1 book value. And I will let you guys know, anything under 1 is very unhealthy in almost any industry across the marketplace. So as you guys know, the Bitcoin miners have been beaten down severely. So as a result of this, their price book is very beaten down. Okay, so Bit Digital, this is one that jumped out at me that is a kind of a big surprise to me because if you remember, Bit Digital was one of the companies that I had put in green, which means their current assets are 10 times their current liabilities. So they have an extremely strong balance sheet. Now, they have struggled from an operational standpoint. So again, you got to do your deep dive and look at some mitigating circumstances. But I believe the last few updates that they've given have been dramatically better. So they're a company with a very strong balance sheet. They're moving in the right direction. And they are trading at 0.68 book value. So that is less than 1. So that means their market cap is less than their book value. So I'm just going to let you guys absorb these. Again, this is just one piece of information. So we have to put this into perspective, but I'm trying to show you guys as many pieces of the puzzle as I can. I look at so many different things that obviously in one video, I can't show you guys everything. But to me, this is an important piece that I've never really talked about on the channel before. So hopefully this is of some use to you guys, but please remember, just don't use this one data point or any one data point. You've got to do your full due diligence before you can really make a decision on buying a stock. So that's the chart. That's my new info. Please let me know down below if this makes sense or if you want me to do more of these types of videos. So thanks again for watching. I hope everybody's enjoying your weekend and I will see you in the next video.